Hi, everyone. I'm Taylor Combaluzier, a mining analyst at Red Cloud Securities. This session of our Oktoberfest Fall Mining Showcase will feature Canagold Resources. We'd like to thank Pear Tree for sponsoring this session. Canagold is a developer and is focused on advancing its flagship New Polaris gold project in northwestern British Columbia. From the company, we have Scott Eldridge, CEO and director. I'll note that if attendees have any questions, just type them in using the Q&A link and we'll get to them at the end of the session. This presentation is also available on the conference website. And with that, I'll turn it over to Scott to walk you through the story.
All right, thank you very much, Taylor. And thank you everyone for listening in today. These are fairly short speaking spots. So I'll chat for about 10 minutes here and then we'll do a 5-minute Q&A just like the other presenters. So again, I'm Scott Eldridge, CEO of Canagold Resources, and I've been CEO of the company for about 3 years now. I'll just move ahead to our standard cautionary note, as I may be making some forward-looking statements throughout the presentation today. Thank you. So moving ahead to investor highlights. Last summer, August 2020, was sort of a series of corporate level events, which we collectively call the rebirth of the company. We changed the name of the company from Canark to Canagold. We brought on a new director, Andrew Bowering, a mining entrepreneur out of Vancouver. We had a 5-for-1 share consolidation. We brought on a new VP of exploration, and we also had a financing where we originally announced 3.2 million, and we upsized that to 8.4. And the use of proceeds for that financing were to drill at New Polaris. And as of May, we commenced on a 24,000 meter drill program, and that's our flagship asset. Again, New Polaris, located in British Columbia. It's in our home province. Our executive team is based here in Vancouver. So the short time that we have together today will primarily focus, again, on New Polaris to talk about the project and the recent drill program. A snapshot of our public company information. So we do have 3 listings. Our main listing is Big Board TSX here in Canada under the ticker CCM, and then secondary listings on the OTCQB in the US, as well as Frankfurt over in Germany. We currently have about 70 million shares outstanding, trading at about 42 cents right now. So that puts our market cap at about $30 million. And we do have a financing that we recently announced that we are scheduled to close hopefully on Wednesday. You'll probably see a release pre-market, where we announced a flow-through financing for 5 million, and we have decided to upsize that due to investor demand to 6.5. So watch for that news release on Wednesday, and I'll talk about the use of proceeds for that financing as well. I'll briefly mention our top shareholders. Eric Sprott personally owns about 10% of the company. Other significant investors, shareholders include the Ruffer Gold Fund from London, England, our founder and chairman, Brad Cook, as well as a few high net worth individuals out of the US and Europe. Those are collectively our top 6 shareholders that control about 40% of the company. So for those of you who haven't met, my background briefly, I originated out of the insurance industry. I've been in the metals and mining industry now for about 12 years. I started off as an equity buy-side analyst for a German precious metals equity fund. From there, I went on to run my own merchant banking firm, which is how I met Brad Cook, our founder and chairman. I raised money for him out of Europe. And then for about the last 5 years, I've been on the issuer side of the business, having spent now about 3 years with Canagold. So Brad's our founder and chairman. He saw the opportunity to pick up our flagship asset, New Polaris, being a mesothermal system, and had been a past producer. Many people know Brad as also being the founder of Endeavour Silver. Gary Biles is our president and COO. He's a metallurgical engineer, mine builder, mine operator, done it many times over his 40-year career. The most notable transaction on his list or accomplishment is he was the former mine manager and part of the build at Eskay Creek before they were taken over. He was with Homestake there. Knox Henderson is new to the team. That's a name that a lot of people recognize. He was formerly with Kodiak Copper and Great Bear. He joined us a few months ago, filling in the position of VP Corp Dev. Troy Gill is relatively new to the team as well. He's our VP of Exploration, Australian. Troy has spent many years with Rio Tinto, where he twice won their internal award for Discovery of the Year. And then rounding off the management is Philip Yee, Chartered Accountant He's our CFO. So moving over to our board of directors, Deepak Malhotra, PhD metallurgist. He's our lead technical director. Martin Burion, chartered accountant, chartered business valuationist. He's our lead director on corporate governance. Andrew Bowring is a name I mentioned earlier. Many people know him that follow the junior mining space. He's based out of Vancouver, very successful mining entrepreneur. Three of his most recent success stories include Millennial Lithium, Prime Mining, and American Lithium. And then Brad and myself on the board. So moving over to the asset side, again, our flagship asset is New Polaris. We own this project 100% in our home province of BC. This is a brownfield site where there was past production during the 30s and 40s. They were mining underground at a diluted grade of about 10 grams. And during the history of the production here, they recovered about 250,000 ounces of gold in the form of a concentrate, and they would barge the concentrate down south to a smelter in Washington State. So fast forward to today, what do we have? This is 1 million ounces, all NI 43-101. May 2020, we completed a PA on the project, ran at $1,500 gold. Needless to say, much lower than the current spot prices. And the economics of this project are very, very robust. It's driven by the grade. We all know the proverb, grade is king. That absolutely resonates true on this project, and that's reflected in the economics. The after-tax IRR hits 56%. Our NPV in US dollars is over 300 million, which is actually a 3-to-1 ratio to our upfront capital cost, which is about $110 million US, and a very quick after-tax payback of 2 years. So as we move this project forward to perhaps become a gold mine again, what differs from the past versus what we are doing today is we're taking the flow sheet to a higher level where rather than producing doré bars on site, we want to capture these higher gold prices and unlock the real cash flow value of this project. And the way to do that is to produce doré bars on site. And that's exactly how the PA is designed. And that's how we will move the project forward eventually as we progress towards a feasibility study. So let me give you a more accurate depiction of where we're located. We're in the northwestern corner of BC, and we mobilized the project through a town to the north of us, about 100 kilometers north, called Atlin. And once you're in Atlin, you can access the project either by a helicopter or small fixed-wing aircraft. Either way, you'll get there in about 45 minutes. So again, we own this project 100%. We're sitting on Crown grants, so we own the surface rights as well as the mineral rights. And at a high level, from a geological perspective, this is a mesothermal gold vein system. That's a term that many people are familiar with, primarily with projects in the Red Lake camp of Ontario. They're not necessarily common in BC, but we do have a neighboring operating mine, the Kensington mine, which is a lower grade than ours, 6 grams per ton, but that's a mesothermal deposit that's in production today on the other side of the border, producing about 125,000 ounces per year. Let me move ahead to our resource table. So as I said, we have a combined approximately 1 million ounces here that is split 50-50 between indicated and inferred. And it's very important to note on this slide that the grade you can see here, 10.8 gram per ton indicated and 10.2 gram per ton inferred, these grades already have a 20% mining dilution rate factored in. So this would represent the head grade to the mill. We're currently drilling on the project. We have 2 rigs on the site. We started that in May. We're drilling 24,000 meters, which is spread over 47 holes. So as of today, we've only put out assay results in news releases for 12 out of the 47 holes, even though we've probably drilled about 3/4 of the meterage. And the reason for that is, the same as going on with most companies in BC and other parts of Canada and around the world, is there's a backlog in the assay labs right now. So we've got a significant number of assay results pending that are in the lab in process. So there's plenty of news flow to come from us. And as I said, we've only put out 12 out of 47 holes. So probably in the next 2 to 3 weeks, you'll start to see more drill results coming out. As a part of this program, we are primarily focused on infill drilling. And if you recall from the previous slide, about half our resources are inferred. So we do need to tighten up the drill spacing on the inferred category from 40 meters to about 22 to move them up to the indicated category to eventually become proven and probable reserves as we go into a feasibility study. In addition to the infill drilling, the drill program itself actually has a second purpose where we're looking for opportunities to perhaps make the 1,000,000 ounces bigger. And evidence of that is our most recent news release intercepted a parallel or on echelon vein about 100 kilometers from our main vein, which hosts the bulk of the 1,000,000 ounces. And on that intercept, we hit about 17 grams over 8 meters. There are surrounding drill holes to that intercept that are not in the resource. So again, this is an example in a mesothermal system where there's always opportunities to discover more ounces, more tonnage in the form of parallel veins, in addition to potential down dip. Let me run through a brief cross-section of the drilling results that were announced initially in July. So back in July, we had 2 infill holes that gave some very interesting results where we had 2 holes that were approximately 24 grams over 6 meters. These results are literally in the breadbasket of the mine. These will become mining stopes one day. And important to note here is that these are significantly above the average grade of the resource, which is 10 grams. But in addition to that, the average mining width on this deposit is 3 meters, and we're seeing intercepts that are significantly above that. So again, these are confirmatory holes, but they are confirming our thesis of a very healthy mine plan and a very well-behaved ore body. Moving along to a cross-section of some of the more recent results. Our last news release gave some information on a parallel vein, as mentioned, which sits probably about 100 meters above the C-West main vein. And if you can see on the diagram here, the C10 vein, again, this is where we intercepted 17 grams over 8 meters. There are some surrounding drill holes in this area. And in addition to that, we have several future drill holes as a part of this program that are anticipated to also intercept the C10. So again, this is an example of a parallel vein where we see opportunities to add tonnage and ounces. Moving along to a 2D image of what the ore body looks like from surface. So starting in the upper left area, the brown here represents where the old timers were mining, and then the yellow area represents the bulk of the 1,000,000 ounces. And you can see the density of the drilling here. This is all done from surface. And some of our recent drill holes in July have actually made the top 5 drill holes in the deposit, where you see the 2 holes of 6 meters of about 24 grams per ton. So why do we believe so firmly that there's opportunities to expand the deposit here? So this is a comparison of other mesothermal gold systems in Canada, most notably in the Red Lake camp. And the one commonality that really jumps out here is the depth that they can go to. So here we sit at only 600 meters below surface, where some of these can go for 1,000 to even 2,000 meters. I know we're really short on time here, so what I'll just do, Taylor, to finish up here is look at our peer comp. So whether you want to use PNAV or enterprise value per resource ounce in the ground, either measurement, we do stack up against our peers as being undervalued. So here we sit at 22 EV per ounce in the ground. And with this drilling, with significant news flow coming out, with closing this financing, we'll continue the drill over the winter. We're going to have steady news flow for the next 6 months. And we certainly think that's an opportunity to start to catch some ground on our peers.
Perfect. Thanks very much, Scott. So we do have time for a couple quick questions. Maybe just to start off, just wondering about kind of what does the development timeline look like going forward?
Right. So the current 24,000 meter program, that'll end in November, and that will sort of migrate into an additional 10,000 meter program. And that's use of proceeds from the financing that should close on Wednesday, as you know. Most likely after the 24,000 meters is complete and we've received all the assays, which would probably take us into February, then we would look at doing a resource update. And then the additional 10,000 meters would be used for the opportunity to discover down dip additional ounces, but also if there's any gaps in the inferred, then we have some meterage to play with where we really want to convert that inferred up to indicated to, again, become future proven and probable reserves. From there next year, we'd also be looking to go into a feasibility study and we didn't have an opportunity to talk about the PEA. But we do have a production profile of 80,000 ounces a year over an 8.5-year mine life. So our ultimate goal is to go into a fees with a slightly larger production profile where we want to have a 1 million ounce reserve. That's our goal. And that would tie into approximately 100,000 ounces of production per year over a 10-year mine life. That production profile, as you know, Taylor, just opens up a lot of doors.
Yeah, excellent. So we are out of time. Thank you very much, Scott, for presenting.